Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com on Wednesday, February 5th. Let's tweet this. Looking at Twitter after hours, the company announced earnings that, well, let's just say they didn't go too well, at least not what the market was expecting. A few different things. First of all, just as a general note that's pretty obvious to all but the most casual observer, trading after hours is really not particularly advisable unless you have extra money that you want to give away, or you feel like you just feel lucky. But you can see a lot of times, not always, and that's the problem, a lot of times the first move is wrong. You've got somebody anticipating the news, or maybe they see the headline number and they do something stupid like buy. Meanwhile, the smart guys, it's kind of like the young bull and the old bull on top of the hill, and the young bull says to the old bull, hey, let's run down there, and et cetera, and the old bull says, hey, why don't we just walk? And so that's what's happened here. You got the young bulls just rushing in, buying the stock, and the smarter guys are sitting back waiting for a little more information, and then they just absolutely pound the living snot out of it from $70 down to well below 60, like 56, 57. That's a pretty big move. And if you're the guy that bought up here, you're selling somewhere. Could be during the conference call, this stock goes from $59 up to $79. Who knows? The bottom line is this is kind of like the badlands of trading here. After hours, simply put, you just don't want to do it. We can even look at the 1-minute chart. You can see if you're a nimble trader and you know what you're doing, hey, you can trade this move, but this move is over now. This is something else. So let's look at the setup for tomorrow. First of all, this is the first earnings report since going public that Twitter has done. And if I recall correctly, they weren't that particularly transparent before they went public. I mean, there was kind of a deal where, because of their size or the number of investors they had or something, they didn't really have to publish a whole bunch of stuff. And guess what? They didn't. And so you've got all these analysts on all across the board giving you numbers that they're just pulling out of their hind end about how Twitter's going to be a $100 stock, or, Twitter's going to be a $20 stock. It's all across the board. Nobody really knew for sure, though, like a lot of analysts, always confident, sometimes correct. But so what do we do now? First of all, the stock is down. We've got some data. I am not going to go into fundamentals here because you're not looking for it. You're not looking to me for fundamentals. And also, I'm not smart enough to really be able to tell you whether this stock is cheap or expensive. But I will tell you this because I got a pretty good memory. When the stock was down here, 40-ish, there were a lot of folks saying, the subscribers just aren't what people think they are going to be. These guys they're very popular, but they're not going to generate the kind of revenues that are being forecasted. So this is a wonderful story that's going to have a really bad ending. There were a lot of folks that were looking for Twitter to go lower. And frankly, I believe I shorted the stock. I shorted it somewhere. I don't exactly remember when, because on my losing trades, just like my profitable trades, I just kind of book it and move on. But I know that I lost money on the short. I think I was shorting Twitter here, but it might have been up here. The bottom line was I'm expecting it to go lower. The technicals looked like the stock could go lower. And so I fired off a short and then promptly got stopped out because the stock continued to move higher. So this is one of those that's kind of confounded a lot of people, myself included. But now